In this video, I will be sharing 2 ways in which you can use fractals for your trading. But before we start, be sure to hit that like button and subscribe to our channel, so that you don't miss on any of our new videos. With that being said, let's get into today's video. So first, let us understand what fractals are. Fractals are nothing but simple price patterns that often occur in the financial markets. So the fractal indicator helps us in identifying the short-term turning points of the price. The arrows that you can see on the chart are known as fractals. The blue arrows pointing upwards are bullish fractals, and the red arrows pointing downwards are the bearish fractals. The big question here is, how are these fractals created? The construction of these fractals is really simple. This is how a bullish fractal is created. A bullish fractal occurs when the high of a certain candle is higher than the previous 2 and subsequent 2 candles. For example, the high of this candle was higher than the high of the previous 2 candles. The high of this candle was also higher than the high of the following 2 candles. Similarly, a bearish fractal is created when the low of a certain candle is lower than the previous 2 candles and the subsequent 2 candles. For instance, the low of this candle is lower than the previous 2 candles. And the low of this candle is also lower than the next 2 candles. So this is a bearish fractal. Now, an important point to note here is that a particular candle will be marked as a fractal only after the close of the next 2 candle. For example, this candle was marked as a bullish fractal. But the fractal was only created after the close of this candle. So, fractals are a lagging indicator. They will show market turning points after the price has already reversed. Whenever you see a fractal, remember that the fractal was formed only after the close of the subsequent 2 candles. A lot of traders like to use fractals as a buy-sell signal. But this approach is naive and inappropriate. There is no way you can make money trading using that method. The better way would be to think of fractals as a short-term support and resistance levels. Whenever a bullish fractal is created, it is simply a short-term resistance level where the price found resistance and made a lower move. Similarly, a bearish fractal is nothing but a short-term support level where the price faced a support and made a higher move. We will use this ideology and think of fractals as support and resistance levels. The first strategy is trading the breakout of these fractals. The strategy itself is very simple. We will look for fractal clusters at a certain area, and we will trade their breakouts. For instance, if we look at this chart, here we see that the price created 4 bearish fractals around the same price area. This means that a lot of traders have bought the stock around this price area. So we mark this as a support level. If we look closely, we can see that the price did not have a lot of follow-through on the upside. So, the traders who bought the stock at the support level will still be holding on to their positions. Now, an important point to note here is that the traders who bought the stock here would have kept their stop loss below the support level. On this candle, the price breaks below the support level. This means that the traders who bought here are now trapped into a losing position. So they will fuel the selling momentum by closing their open positions. Therefore, their selling will create a massive selling pressure, and as you can see, the fell down for around 14% over the next 3 to 4 days. Trading the breakouts of such clusters is a good way of catching short-term momentum bursts. Now let's look at a buy trade. On this chart, we see that the price created 3 fractals at this price point. So we mark this level as a strong level of resistance. This shows us that a lot of traders entered sell trades at these fractals. And as you can see, there was very less downwards follow-through. Therefore, we can say that these sellers will still be holding on to their selling positions. The stop losses of these sellers will be right above the resistance level. On this candle, the price breaks above the resistance level. At this point, the people who sold at these levels will be in a losing trade. So they will try to exit their positions, which will fuel the upside momentum. And as you can see, the price gave a 16% up move within a few trading sessions. So that is one way of using fractals for trading. Now let us understand a trend trading strategy using fractals. So, trend trading basically means trading in the direction of the trend. To trade in the direction of the trend, we first need to identify the trend itself. For that we will use 3 moving averages. We will use the 10, 20 and 50 period exponential moving averages to identify the trend of the market. In a strong uptrend we see that the price trades above all the 3 EMAs. The 10 EMA is above the 20 EMA, and the 20 EMA is above the 50 EMA. So the price is trading above the EMAs, and the EMAs are sequentially lined up. We also want all the EMAs to be sloped upwards. This is a strong uptrend. In an uptrend we want to look for buying opportunities. Similarly, in a strong downtrend, we see that the price stays below the 3 EMAs, and the EMAs are sequentially sloped downwards. The 10 EMA is below the 20 EMA, and the 20 EMA is below the 50 EMA. This is a strong downtrend. In a downtrend, we want to look for sell trades only. Now let's look at a buy setup. On this chart, we can clearly see that the price was trading above the EMAs, and the EMAs were all sloped upwards. The 10 EMA was above the 20 EMA, and the 20 EMA was above the 50 EMA. So this is a sign of a clear uptrend. In an uptrend, we want to look for buying setups only. Now, let's define a buy setup. A buy setup will occur when the price breaks above a bullish fractal. Simple as that. So, here we see that the price created this bullish fractal and made a downwards pullback. So we mark the fractal as a resistance point. Now we want the price to break above this fractal. An important tip here is that, during the pullback, the price should not close below the 20 period EMA. If the price breaches and closes below the 20 EMA, the trade will no longer be valid. We want the price to find support at or above the 20 EMA and reverse. When the price breaks above the bullish fractal, we will enter at the close of the breakout candle. We can keep our stop loss below the 10 EMA, and we can place our targets at 1:1.5 risk-reward ratio. And as you can see, we made profits on this trade. Now let's look at a sell setup. Here on this chart, we see that the price was trading below the 3 EMAs. And the 3 EMAs were sequentially sloped downwards. The 10 EMA was below 20 EMA and the 20 EMA was below the 50 EMA. This was a clear downtrend. In a downtrend like this, we want to look for sell trades only. On this candle the price creates this bearish fractal and makes a pullback. So we mark this as a support level. Then, we wait for the price to break below this support level. Before the breakout happens, we want to make sure that the price does not close above the 20 period EMA. On this candle, we see that the price breaks below the support level. So we enter a short trade. We can keep our stop loss above the 10 period EMA, and we can place our targets at 1:1.5 risk-reward ratio. As you can see, the price made a strong down move after our entry. So that brings us to the end of this video. If you liked this video, then be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. See you soon.